Big welcome to our live audience for the Digital Health Investor Talk show. I'm your host, Steve Wardell. I'm the managing partner of Wardell Advisors, a digital health advisory firm, and the author of The Future of Digital Health. Wardell Advisors is helping digital health companies address issues around growth, fundraising, trade sales, and strategic alternatives, giving you more options in today's challenging environment. You can follow me on x.com/Stephen Wardell. Our show today is on the topic of how tech empowers aging boomers. It's with Meredith Oppenheim, an expert on aging and the founder of the Vitality Society, an online platform designed to enrich, engage, and empower people 60 and better to remain at their best. The platform's been featured in the New York Times and Forbes, and it's been referred to as a lifeline and a game changer for physical and mental well-being for seniors. Oppenheim spent 20 years gaining operational experience in the senior housing industry, working for leading owners and operators. Most recently, she actively managed a multi-billion-dollar portfolio for a healthcare REIT. Oppenheim also served on Mayor Bloomberg's Age-Friendly New York City Commission and the New York City Department of Aging Board. This show is being recorded and will be included in our podcast series called Digital Health Investor Talk. Subscribe to our podcast on Apple and Spotify, and we always love getting reviews. This show is not investment advice, and we are not investment advisors. Here's the format of today's show. It's about 90 minutes long, and Meredith and I will spend the first part discussing the news and the macro picture and some other topics, and then we'll focus on our special topic of the day. And we'll be taking your questions throughout the show in the LinkedIn text chat. So welcome to the show, Meredith. Can you introduce yourself to our audience?
Absolutely. Thank you, Stephen. Delightful to see you, and even more excited that you're actively looking at and participating in this senior care and housing sector. As Stephen said, I have been working in the senior housing and care industry for a number of decades. We were HBS a year apart, so I graduated 01 and since that time have been in the sector of senior housing. Proud to say that I had the opportunity to work for some of the largest owners and operators. I've asset managed multi-billion-dollar portfolios for publicly traded REITs and private equity firms, and I currently serve as a strategic advisor to CEOs in the industry. I predominantly spend my time working with one of the large regional nonprofits in my home state of New Jersey, which is where I began my senior work when I was in high school. My girlfriends went to the right to go to the hospital to take care of sick people. I decided to go home. What could I do to keep my own grandparents well? Their longevity and vitality became my priority. So I baked for them, cooked for them, did the same for seniors throughout New Jersey, and have continued this mission-driven work to this day. So it's truly an honor to be here and learn from you as much as contribute to your program.
Great, thank you. So moving on to our first topic of discussion is macro news. And so here we look at what's going on in the macro economy and how it affects digital health, and also for this show, the age tech and senior living and that sort of thing. And so, it's interesting to see for the economy, we have the NASDAQ has recovered. It's near record highs. It's been a pretty steady march with a couple of pullbacks over the past year upward. I think people weren't expecting this much lift in the NASDAQ. At the same time, though, there's a lot of reports of that it feels like half the economy or more is in a recession, and we were due for a recession. And we're also that there's been many layoffs announced, and it seems like job openings are slow. And I've heard of a number of mid-career professionals who have who've been laid off, and they feel like everyone's being laid off at the same time, and there's few openings, and they're wondering what's going to happen to sort of their rung on their career ladder next. And so they're very concerned about that. So it doesn't feel like a strong economy, even though we might get published numbers showing solid growth or employment. So I guess. And what does that mean for digital health? Well, I think for young companies in digital health, we want a strong economy in general, so we don't have a particularly strong economy. We want a high stock market because we want the idea that when we exit this company later, we're going to be able to sell it for a high price in the capital markets. That's what a high stock market level means. But if companies are going through a downturn, if they're cutting back, this tends to change the spending priorities of the big budgets of healthcare. So the big budgets of healthcare are what hospitals spend on tech, what health plans spend on tech, what pharma spends on tech, other areas like that. And it tends to change the priorities of the tech buyers and what they're looking for they might be looking for cost efficiencies and workflow automation, for example, during a recession. So that's one of the implications this has. So Meredith, what are you seeing in the economy, and what does it mean for seniors, do you think?
So it's interesting. I think your observation about those that are very senior in their careers and there are certain sectors that have been hit harder than others. I would say that the AFIing of the economy is complicated for those people who are close in age to us, right? Those that are in their 50s and older. What I'm seeing in communities that I'm part of is you have people who have tremendous breadth and depth of expertise. One area in particular is marketing, and you're led to a place where you have to reinvent yourself. Truly thinking through how do I leverage these skills from, frankly, an older economy into a newer economy. It comes as no surprise. Many of us could relate to the themes of vitality and longevity very much so, as well as caregiving that we're in the middle of. That I was told that our generation is no longer called the sandwich generation; it's called the panini generation because we're being crushed on all sides. So I do think it's important for our generation to continue to generate dollars so that we could afford both the child care that we need as well as the adult care, given the cost of senior housing and care. So you have a population of people who are going to live longer. They want to work longer. They need to work longer, and you have to be able to reinvent yourself at a later stage of your career. So that comes with certain complexities. Also leads to opportunities. As an example, there are so many senior entrepreneurs, right? I was in a story of in the Wall Street Journal that was featuring senior entrepreneurs. And what was so interesting was that I was too young to be featured, but I was too old to, to be considered that I was like not right in the place, right? I was either neither here nor there, but I was, well versed in this population of people that are young at heart. They want to stay relevant, they want to do important work, and they need to generate income. So um do think this labor market affects the industry in very pronounced ways. As an example, as you know, one of our greatest costs and is labor. And when caregivers are harder to come by, it becomes more costly to find great people. Obviously, immigration and ICE and other factors that are very relevant right now impact the number of people that are part of our labor pool and that we can hire and that could provide care and services to the seniors and families we serve. And that adds a level of complexity and a level of cost. And with that comes higher prices. So people have to pay more, and it's already very costly to live in senior housing. And so it is very labor dependent. And we are seeing that over time, things are also becoming very expensive as it relates to supplies and materials, food, et cetera. So it is challenging economically when the prices are going up, but everybody has a fixed income, those that we serve. So really leaning in on families to subsidize what many can pay is vitally important.
Yeah, really interesting. Thank you. And so, and we've had a lot of inflation lately, and I don't know how it means some people, it means a number of things. One is that it means that you can't just put your money in safe things like money market accounts. You need to put your money in riskier things that have a higher return to just keep up with inflation. And then for people who, and it means that your paycheck's worth less. So you're going to have difficult negotiation with your employer at the end of the year just to stay running. Who is it? The Red Queen in Alice in Wonderland said that you have to run faster and faster just to stay in the same place. So
Correct.
it's
You
and
still have a boss to talk to, right, Stephen? Hopefully you have a job.
yeah, and then seniors will have retired and with a fixed amount of money and a fixed income, and then what do they do when things cost more? It's tough. So and then next macro topic is the Fed and interest rates, and so a lot of us are living in a world right now where the Fed raised rates very rapidly in the face of big inflation fears 3 or 4 years ago and raised the Fed open market rate to 5%. Uh, and we'd never really seen anything like that in our professional lifetimes. And it caused a major funding illiquidity in digital health and a big problems for digital health companies. And now we seem to be in a cutting cycle, and that seems to be on track. And the only issue is the Fed going to cut infrequently or cut regularly or cut a lot quickly. And I think that the stock market's built in an expectation for the next. So at the last Fed meeting, the Fed cut by 25 basis points. But the stock market's built in that the next Fed meeting, which is December 9th or 10th, the Fed will also cut by 25 basis points. And my general view here is that in digital health, we want the funding environment to get better rapidly, and so we want this cutting environment. We'd like the Fed to continue. We'd like the Fed to cut faster. Obviously, we also don't want to be surprised by high inflation, which is the whole reason the Fed's is going slow on this in the first place. But so I think that this is in line with what the innovation economy and digital health wants, is to see the Fed cutting last quarter and next quarter. And so this should make the fundraising environment a little easier. Among other things, major institutions will move their money out of fixed income, and because they'll only be able to get a few percent return, and they'll move it into growth categories like digital health again. So Meredith, any just thoughts on the broader economy or interest rates?
Absolutely. So interest rates really do impact senior housing quite a bit, Stephen. So for example, seniors have to generally sell their homes to move into another home. So when interest rates remain high, borrowing is more expensive, and those that may otherwise decide, maybe it's not the right time to buy a home. So, right, if it's going to cost you more to buy, maybe you stay put where you are. And it's harder for seniors to get out of their houses. And when it's harder for seniors to get out of their houses, it takes them longer to move into senior housing, which is already a very big decision over a protracted period of time. So interest rates definitely impact seniors as sellers in a climate like this. Also, the idea of senior housing inventory, we're hoping that we could keep up with the growth of the senior population. And what we're seeing is if it becomes more expensive for us to borrow, it becomes more cost prohibitive for us to build. And therefore, when we're looking at the pro formas of various new projects, and you see, in order to pencil out a deal, it needs to cost, for example, like twice as much as people are currently paying in the market. It's very hard to say yes to those deals. And so people play it safe, right? Those that could build and those who are buying. So in our sector, we're seeing a substantial slowdown in new supply growth as a result of just being too costly to build, all the materials too costly to finance, and therefore not enough growth in our supply as at a time where we've been waiting for this moment for 25 years.
So not only are interest rates high, but also cost of building materials and cost of labor is also high.
Correct.
And so builders are saying it's not a good time to start building. And yet there's also a lot of boomers retiring who would like affordable senior housing.
Well, that's a whole other story, right? So we could talk about that. But right now, only 13% of single households 75 and older could afford senior housing or care at home, right? So we have an affordability crisis in this country. Whether or not, this is happening now, it's not even when the boomers are coming. It's the generation that are grappling with it at this moment. So that's a challenge that our industry is trying to resolve. I'm proud to say that working for a nonprofit, we have a very different approach to this. On the for-profit side, right, it's obvious. We're trying to create returns for our shareholders, whether in the public or private markets. When you're working on the affordable senior housing side, we have only one stake to answer to, and those are our residents. We have a full continuum of senior housing. We have affordable senior housing, and then all the way up to luxury market rate apartments for seniors with services and care. So I do like the flexibility at this stage of my career to look across all income levels. And the chapter I'm excited about in 2026 is looking at how do we grow more affordable housing, because the need is extraordinary. We have 19 communities right now in the state of New Jersey, but the need is national and it's huge, and it's very hard to do, as we just discussed, because it's expensive. And also, I know we're not going to talk about this, but like HUD financing and other forms of financing are harder to come by in this climate, and uncertain and unpredictable. So we have to think about bridges to these lower cost financing vehicles and hoping we get them and these projects pencil out. But the crisis is huge and the need is great, and a time is now.
And by the way, I heard an interesting story recently that where there was a Catholic school. There had been a mansion in Boston, inside of Route 128, the Boston Ring, and there was a mansion, and the Catholic Church bought it 100 years ago and turned it into a school, which sounds great. And recently, the neighborhood doesn't have any kids in it now, and so the
Mhm.
converted it into a senior housing, and that I think is a little snapshot of demographics. It's the demographics of that particular neighborhood, but it's also demographics of America. We need more senior housing, and for better or for worse, there aren't as many kids, and so some schools will also be shut down or converted as well. So,
Yes. And you'll see that in the universities, right? A lot of small universities are really struggling with AI learning and, AI, what is the future of education? Before AI took place, everybody was concerned about the cost of higher education. Is it justifiable? And so a lot of these smaller universities are converting. There's a potential use case absolutely for senior housing. There's also a number of universities that have added senior housing, or developers have done senior housing in proximity to universities near various different use cases. Churches are a great example, Stephen, especially on the affordable side. It's looking at sites where there's substantial parking, where there's already community, there's already a congregation, and how do you tap into that and support that, and on the affordable side specifically. But it's a great use case.
mm. Yeah. So I don't know if our audience, and by the way, for our audience, feel free to ask questions in the chat, and Meredith and I will jump to those questions. But I don't know if our audience knows this, but you can actually do searches on real estate sites, and up will pop universities that have shut down in the last few years. And the Northeast of the U.S. is full of little universities. 150 years ago, there was a massive boom of little universities. Every region had to have its own liberal arts college. And now, there's been there's fewer students. There's a maturation of the industry, and some of these colleges just can't make it. And then the campus turns up. And the context I'd heard this in was that there are groups of friends who work in, say, software development, and they're saying it's 1.5 million to buy one small condo in San Francisco, but it's 5 million to buy a campus with 12 buildings well laid out in rural Vermont. And so why don't a bunch of us get together and buy that and live there? So I've heard it. And then usually this is met with great enthusiasm for about 2 days, after which no one actually commits to moving to rural Vermont and to buying the site. But an obvious alternative is for it to be senior housing.
My brother actually has a friend who did that. He bought a university in Vermont. Maybe that's part of the community you're referring to. It's happening, right? I mean, these small universities need new life, and senior housing could be a great use. That being said, clearly in Vermont, when you're a senior, is a tricky environment. It is global warming, but it's not that warm. And I think seniors like the flexibility, and that could be one of the places that they live. But there's also an opportunity, obviously, in some of the warmer markets. But it's an interesting time, and these universities provide a very exciting opportunity, no question about it.
And James in our audience seems very excited about the idea of dorm living for seniors. So,
Yes. Yeah. So it's an interesting question. So I gave a talk this summer in Arizona, and one of the communities that's often written up it was called Miraval. It's in Arizona. And what's fascinating is they had a number of issues. It was in a downtown area, and it was over a bar or beside a bar, and there was so much noise. And obviously that's not what the lifestyle the seniors wanted, but when you get close to a college campus, that might be what you get. And there was a lot of friction and tension between the constituents, right? The older people wanted peace and quiet, and the younger people wanted vibrancy and late night. And so I do think these generations coexisting is very promising. It is a wonderful opportunity for, if a university, for example, has a medical school or a nursing school, to have seniors close by. And then the seniors really benefit both contributing to content, can teach, as well as consume content as students, which is an alternative revenue source with a lot of universities are tapping into, whether people live there or close to there. So, yeah, so the idea of dorm living for a senior, yes. Living beside a college student, probably not. And in a quiet spot to avoid the noise is something seemingly desirable, at least in Arizona. So yes, but who doesn't want to go back to their college days without all the homework? and stress.
And James adds, it's already being done in retirement communities in Massachusetts. Thanks, James.
Absolutely. Yep. There are many examples. I just gave one in Arizona.
So I'll throw in one last macro news is about the IPO environment. This is an area of what I would call that the feeling here in digital health is one of disappointment in the IPO market. So there have been 3 digital health IPOs this year, and it looked very promising. If you cycle back to the March, April, May timeframe, it looked very promising for the whole year. And the opening of the IPO market was led by Omada and Hinge. And there's 100 digital health unicorns that would like to go public, and they're overdue to go public. And then we had Heartflow was a third digital health company that went public. And then we haven't seen any since then. And so it's not clear why. Ultimately, and other companies have gone public, not in digital health, but we need a lot of the digital health unicorns to go public and to trade up and to do well. We need that as an industry. And in fact, the biggest critique of our industry by investors is that there have not been a lot of good exits. And so we need good exits, and we get good exits by having unicorns go public. And we had 3, and we thought there'd be more, and then they just stopped. And the obvious reason, no one knows exactly why, but the implication is that the remaining companies are not attractive enough in their fundamentals, because and usually that's a combination of top line growth rate, high growth is exciting, and then also gross margin. High gross margin means you're a leading company and that you'll be able to generate consistent earnings in the future, that sort of thing. And so we don't know why there haven't been more, and there have been occasional rumors. Everyone's favorite game is guessing who goes public next in digital health, but it panned out. We don't know why. And so there's still an opportunity before Christmas for more companies to go public before the new year. But it was shaping up nicely in the March, April, May timeframe, and it's just been a disappointment for the second half of the year. And then Meredith, I don't know if you follow. Are REITs a hot category, or are senior REITs a hot category? So just curious.
Yeah, I can speak to that. So, well, first to comment on what you're saying, I think the challenge for investors looking at senior housing and care type of companies, like those that are going to service our industry, like, right, if you think about it, we are a great channel partner, right? Because if you go direct to consumer, it's harder to pick up many senior lives. If you go through a senior housing owner operator, we have aggregated those lives. So we are a very valuable channel partner. That being said, it is still a young, relatively speaking, and small industry. So doing senior housing and serving the sector exclusively just may not give the type of multiples that investors are looking at. And we haven't had, like you said, many big exits, but there is still tremendous capital flowing to the business, which is exciting. And I think with more time and more growth in the senior population, you'll see, good signals of potential IPO targets and candidates. So one thing I'll say is the REITs, I worked for one of them. I worked for Ventas. We, as an industry, aggregate our real estate part of these REITs portfolio, and Welltower's one of the biggest in the industry. They just announced 23 billion in senior housing transactions are going to happen in the year, and that includes about 14 billion of senior housing. So it's signaling that capital is returning to senior housing, certainly at the right time. But they're one of the biggest players. They're one of the more aggressive players. They have been behind a few of the new projects that have been developed here in New York City. And I will say some of the other REITs play it much safer, right? So Ventas, for example, not so likely to take construction risk in the senior housing sector, much more likely to buy stabilized portfolios. And I sold my stock, Stephen, after 10 years, hoping that I'd get like the front end of the boomer explosion. And it was pretty much flat, where Welltower was like X in the same period of time. So again, same business, same structure in a REIT, but they're different CEOs and they play it safe. And therefore, the stock doesn't have such a massive response. So I do think the publicly traded senior housing companies is not worth mentioning, but one of them has fallen into pretty hard times, Brookdale. So the industry has gotten a little bit of questions and concerns around, oh, if it can happen to them, what can happen to us? So I think the REIT space is something that fluctuates with interest rates and with senior housing and all other forms of healthcare real estate that they invest in, like medical office. I think it's an interesting sector to take a look at if that's what you do.
Yeah, thank you. So Faye comments, yes, the IPO and the M&A markets are disappointing. I assume she's talking about digital health. Yeah, that's right. So 3 IPOs and then nothing for 6 months. And then also the M&A market is predicted by many, including me, to necessarily pick up. And it has still been relatively slow. And what I'm hearing is that there, you know, that so big tech is a possible acquirer of digital health companies, and they are distracted by AI right now, so they're not acquiring. And then super vendors is like Teladoc is a super vendor. Then they've made acquisitions like their acquisition of Livongo, and they are generally trading at low valuation multiples right now, depressed valuation multiples. That means they don't have a red hot currency. They can't go around buying people with an inflated stock. And so there's a need for consolidation. Product purchasers want suites, and many digital health companies are point solutions. And so there's a need for a consolidator to go and roll up these point solutions and sell a suite of products. So the buyers are demanding that, but then the consolidators are not moving very quickly to acquire the young point solution companies, which is bad news for the point solution companies because if they can't, because they themselves are having trouble raising money in this environment. And then Doug comments that distributions to paid-in capital for venture funds that invested in vintages of 2018 to 2020 are almost non-existent. Yeah, that's a huge issue across the board. Basically, if you had the luck of the draw to raise a venture fund and put the money to work in 2018 to 2020 in digital health, but also in B2B and also in B2C, then you put your money in at the top of the market, and then you have the usual attrition of companies, going under. But then you're not seeing a lot of lift. You need maybe make 10 investments, and you need 1 to be a home run, and you need 3 to do relatively well, and you could have 7, or you could have 6 lose out. But they're not seeing the returns in their winners because they invested at the top of the cycle. And I saw, the B2B market is like digital health, except not healthcare focused, but it's very well studied. There's a lot of studies there. And there were estimates that many of the venture funds that invested heavily in the 2018, 2020 vintages will not be able to raise a next fund. They're not giving distributions to their paid-in capital. And so then they go out to raise a next fund, and they're to their people who backed them before, and they're not interested in investing in another fund. So that's we're definitely seeing a lot of that. Thanks, Doug. Meredith, just any thoughts on that?
This is very relevant. So I launched Vitality Society, which you alluded to before, which is an online community for fitness, wellness, and enrichment programming. And we were catering to a population of 60 and older. And it was interesting because after 25 years in the industry of senior housing, I realized, and this is an important statistic for those who are studying the industry, that only like 11% of the population moves into senior housing. And so the majority of people are going to stay put at home. So I thought to myself, if you decouple the real estate from the services and experience of senior housing, how do I get to learn and know about this next generation customer? And what was fascinating to learn was that these people are very committed to staying connected and well, which was our thesis. But they also have a low willingness to pay. And so what I ended up doing, because I was running hard and fast leading this business in the period I launched January 2020. So we went from valuable to vital pretty much overnight with the pandemic. And I decided, Stephen, to keep consulting because I knew that I can earn consulting income from asset managing and senior housing and fund my own startup and hopefully find that equilibrium and charge like $1 a day and right size and right price our offerings so that I could afford a very robust 7 days a week live fitness program. And it worked out that well. And I was able to keep it going for about 5 years, our pilot period. But there was no question about it. There was so much frothiness in the market. There were so many players in and around our space that were raising substantial amounts of money in 2021. Frankly, pretty much none of them exist today. None of these companies, none of them were able to show any growth. The revenue was supposed to come from a payer subsidizing, all the users' usage of it. And it didn't work out that way. So those deals deals with insurance companies are hard to come by. They're hard to monetize and optimize. And so ultimately, these companies didn't have the growth and weren't able, as you said, to go out and raise a next round. And so there has been a pruning of all these businesses, and it's very interesting to see how it plays out, who will get funded. Everything now is AI, right? Just came back from an innovation forum, and pretty much most of the companies that are incumbents in the space introducing an AI strategy. Alternatively, AI players that are going to, through some sort of API, connect to existing platforms. We are going to be in another period of hyper growth. I think about, Stephen, when we were at HBS, you'll remember, like I arrived there in 99. I came from the internet business when I was working at Time Warner, and everybody's like, wait, where are you going? And I said, I'm responsible for revenue generation at this Time Warner venture, CNN Sports Illustrated. I don't see how we're going to do it. And I was very concerned. I didn't want to go down with the company and the division. So I decided to leave for HBS. And when we got to HBS, they were first year, everybody was talking about why these internet companies were worth so much and how we should understand this new economy in new ways. And by the second year, when you had already graduated, Stephen, they were like, we're going back to the economy as we always knew it, as it always was. This is, now, the year 2000, 2001, we've got to go back to the fundamentals and basics because everything we learned about the new economy wasn't sustainable. So it's interesting. I wonder if we're going to see something like that, this over exuberance, and then things kind of settle down and die down. I'm sure it will be that way. But as one professor said, this is like electricity, not going anywhere. It's just going to transform everything.
I've heard a joke. This is a joke told by VCs about all the pitches that they're seeing. And the joke is that there are only two investor decks out there today. And there's the investor deck for the company that's less than 2 years old. And then there's the investor deck for everybody else. And for the company that's less than 2 years old, the investor deck has only one slide, and the slide has only one bullet point. And the bullet point says generative AI. And then if it's more than 2 years old, then there's a deck and it has one slide and it has 6 bullet points. And the 6th bullet point says generative AI. And the first 5 are last year's deck. So anyway, and then we have a remark from Judy who says, do you see older adults as a true addressable market for health tech like wearables, biomarker tracking, etc.? And so Meredith is going to be the real expert on this question, but I'll just mention that from the innovation economy, what we care about is young little startup companies that have a technology and a product, and they're pursuing a market. And it's actually very challenging to go after the senior market with, let's call it consumer products and FDA cleared products, let's say. You wouldn't make an iPad for seniors. What would happen is a giant conglomerate called Apple would just take its iPad and it would add an accessibility feature for seniors. But you wouldn't make an iPad just for seniors. And so that's a dilemma that's faced with a lot of categories of these products. Then there's also a weird dilemma, which is that sometimes seniors don't like to be sold to as seniors. They don't see themselves as seniors. They don't like to be sold to as seniors sometimes in a consumer branding marketplace. And they want to buy the Fitbit that's for the fit middle-aged person, and they're not looking for a Fitbit that's being sold to seniors necessarily. So it's a tricky market. I'm talking specifically about startups that are started with a technology to create a new product and sell it into a market, and they find the senior market a bit tricky. So, but that doesn't mean Apple finds it tricky. So, but Meredith, did you have any thoughts on Judy asking about, do you see older adults as a true addressable market for health tech, like wearables, biomarker tracking, et cetera?
So it's a very interesting question because, first of all, the senior market is so diverse and you have to start to think about it in different ways. And it's not always age dependent, age specific. So there are people who are very tech savvy who are older, and then there are people who hate technology, right? And so what I think the genius of Apple is Stephen, you said it, it's like one size fits all, but there's flexibility within there. You change the font size, what have you, but the devices as they are and the interfaces are designed to be simplistic. The Apple Watch, as an example, wasn't ever designed or intended for seniors specifically. Apple wouldn't come out with a product like that. They have a universal appeal and universal design. But at the end of the day, that Apple Watch has been very valuable to seniors in the sense that they could look at their heart rate, they could look at their steps, there's emergency buttons, there's all these different apps that are relevant and important to a senior living safely and independently. And that's what pretty much depending on any of your level of technology sophistication or your age, there's this overarching overall desire to remain healthy, well, and independent. Like there's no question about it. People want to be able to continue their lives. Nobody wants to be sick. Nobody wants to decline. Nobody wants to be a burden. All of these things are true, and these devices simplify that and allow you to live independently more safely. I will say that it is a true addressable market, but going back to the challenges of adoption, right? So, how do you get a product to market? If you're selling to seniors exclusively, it's challenging, right? You have this direct to consumer challenge, which is very costly. And then we, senior housing, as a channel partner, you have to then sell into the senior housing industry. And then you really need an ROI. What is the return on the investment for any senior housing company to invest in your technology? So, having just come off the Senior Living Innovation Forum, there were companies from all over the world there, and one of them had like a beautiful lamp. And in that lamp, they were studying and understanding like all the data of how people are moving through the room. And there's a lot of sensor companies that are trying to do the same thing. And then there's, the idea and the concern of like, how much is my data being collected? Who's looking at it? And so rather than now in the next generation products, rather than seeing like actual people, it's like almost like imagery of energy. So you could see like the lines of a human, but not the actual human. So this big brother watching is of great concern for people with their privacy and dignity intact. And so this idea of having these alternative options so that you don't feel like it's such an invasion of privacy. But the industry absolutely for adults definitely interested in, I would say, technology, but the idea is simplicity, right? There is no question about it. It is vitally important when you're designing for seniors to make it simple, not about dumbing it down and diluting it down, but making it like an Apple device. Like you don't even know what's going on behind the scenes, the buttons you're pressing. Remember the Google, like the one bar, you're in Chat GPT. It's so simple. It's so accessible. That's the way to think about seniors. But I will say companies that have tried to sell directly, it's challenging. Deals with ARP are hard to come by, and it's no guarantees that seniors are going to adopt and adapt to the technology that quickly or that easily. A harder market to sell to, but not an impossible one. But know that the appetite is there. Aligning it with remaining independent is key. Being able to use it without a lot of angst or any kind of technology assistance that might be required. Keep it simple. And when I said on Mayor Bloomberg's age-friendly commission in New York City, what we learned was a lot of the interventions that we were hoping to do for seniors, like a good example was curb cuts or seating bus stops in New York City. What we discovered was what was going to be good for seniors was going to be great for everybody, even, right? So this idea of having a curb cut where you can go and use an assistive device, whether a wheelchair or a walker, is so valuable. But that's so valuable if you're a young mother of a young child pushing a stroller, or someone who is on a scooter that has a toddler that wants to zip through the city. Like these curb cuts are universally appealing. So I would think, and IDEO does some great work in this area, is to think about universal designs where seniors could be one user base, but not exclusively. But think about simplicity because that's key.
Thank you. Well, so now we're moving on to the next section, which is talking about business and trade journal news. I'll talk about digital health, and Meredith, you're welcome to talk about senior living and other things like that. And so here, first is that I was very concerned in the last couple of weeks. I did not see a lot of announcement of new fundraisers in digital health. And so that is a continuation of this trend of disappointment in the amount of fundraisers. And we have seen more this year than last year. And a lot of it's heavily weighted toward generative AI. A lot of it is heavily weighted towards safer later stage companies as well. So the innovative companies that are not generative AI have been having a difficulty raising money. So, but didn't see a lot of fundraisers. One thing I did see was that NVIDIA, this is a very unusual, has entered into a partnership with Lilly. So NVIDIA is now a $5 trillion market cap company, which is incredible considering that I think the first $1 trillion market cap company was Apple a few years ago, and now there's several, and one of them is a $5 trillion market cap company. And but with Lilly, they're going to build a supercomputer on a Lilly campus for inference for drug discovery to identify, optimize, and validate new molecules and train AI models on millions of experiments to test drug candidates. And so this is very interesting. This is a unexpected hit category to come out of generative AI and other kinds of AI, and the boom in GPUs, which do a slightly different kind of computing than the old CPUs that are in our laptops. But basically, so a lot of people on this call will know that the work inside the cells of our body is done by proteins, and those proteins come ultimately from the genetic material nucleus of our cells. We have genes; they have code in them. The code is turned into messenger RNA. The messenger RNA is read by ribosomes. The ribosomes create proteins. The proteins are a string of amino acids that then folds, and that act of folding determines the shape of the protein. The shape of the protein determines what the protein does. And researchers would love to model perfectly that folding of amino acids to get us to a protein. But it's been called one of the hardest real-world math problems in history. It's so hard to accurately model the folding, but it has to be done accurately. And if you can do this, then you can model what a drug candidate looks like and its active site and what the active site will do. And then you can also model a drug target and what the active site looks like, its shape, and what it will do and what it would take to change it, modify it somehow, which is what drugs do. And that means that you could do research around drug discovery in silico. You can do it in a computer instead of in a wet lab. And that means, in theory, you could scale it up to be 1,000,000 times more powerful or 1,000,000,000 times more powerful by using compute. So this is sort of a holy grail. And what you're seeing here is Lilly and NVIDIA teaming up to build a massive model of this. And there's many young companies, innovative companies in pharma tech who are trying to build this and trying to sell it to pharma. And unfortunately, a lot of pharma companies have said, it's amazing what you've done as a young, these are sometimes called tech bio companies. So big pharma is saying to little tech bio companies, it's amazing the models you've built. We're modeling better and better the shape of proteins through the folding of the amino acids. But we're actually not going to, what you've done is amazing. We're actually not going to buy what you've done because we think it's so important. We need to build it ourselves. It has to be ours when we build it. And so this is an example of that, Lilly partnering with NVIDIA to build a giant supercomputer campus for this.
Oh,
So very interesting. It's also a form of validation. There's a lot of concern. So before this generation, there were many generations of people saying, I have an idea. Let's build a matrix of test tubes that's 1,000 test tubes, and then we can do tens of thousands, millions of experiments just rapidly, and that's how we'll develop our next drug. And huge amounts of investment dollars went into that concept, and in general, it failed. And so people are worried that if you do 1 billion or 1 trillion experiments in silico, it could fail just like the prior generation of giant matrices of test tubes. But this is I would call this a validation. If Lilly is betting on this, then I think it's more likely to have a future outcome down the road in 2 to 5 years or whatever. So that's NVIDIA. And then I saw Honey Health raised an $8 million seed round from Pelion Ventures, Streamline, Burst Capital, and 8-Bit Capital. And so this is a company that has an AI back office for medical practices that does workflow automation to automate data fetching, patient notes, post-visit orders, refills, and prior auth. So I didn't see a lot of fundraisers. This is one that I saw. And the first thing I note about this is that this is a deal of the month, sort of. It's the spirit of the times is automating the healthcare back office with Gen AI. That's exactly what Honey Health is doing. It's another company that's hitting the exact sweet spot of what's being funded. The second thing was, these are not mainstream venture funds. This is, where is Venrock? Where is Kleiner Perkins? Where is, a Flare? Where is Bessemer in here? These are non-mainstream healthcare venture funds. It suggests that this company has had to go outside of the digital health mainstream to find investors. I think that's interesting, and it's sad because I'd like to see the mainstream of digital health funds investing in this. And Meredith, any thoughts on or any thoughts on what you're seeing in the business and trade journal news?
I just saw my friend from Flair at one of the Cornell conferences, and he said everything is just so expensive. So I think they're on the sidelines because these deals are very overpriced. And so perhaps, I don't know what's coming that's cheaper or better, but, rather, I guess, keep their powder dry than pay too much and not get the returns for investors that are required in these types of deals. I would say, in our sector, having had a number of conversations with AI providers, it's interesting. There are companies that are, as an example, one of Israel, and he was so excited. He said, I started doing this company because I was documenting my grandmother's story, and I created this AI engine that would allow me to craft my grandma's story without any human intervention and produce some sort of overview of her life that could be published in some way. And I thought that was genius. Then he's like, but that had no real value to senior housing, right? So I think in senior housing, there are various buckets for us. And one in engagement, which is super interesting, which is aligned with quality of life, getting people engaged in activities and types of programs where this is a good example. You can come in and someone could do a story about their lives without any kind of staff involvement. And so that's very interesting, but it's not something that we can monetize easily, right? Most people aren't going to pay more money to do that. And therefore, it comes at a cost exclusively to us. That being said, the cost is very low. So it's interesting and maybe not that expensive for us to offer something like that. But on the other hand, this individual quickly learned, well, wait a second. When as if you go to the biggest pain and problem in the sector, and one of the biggest challenges we have is hiring. So if you start to look at AI solutions where we have the biggest challenges industry, which is the idea of filling positions faster. So if I can go through many applicants, screen them quickly through AI engines of all sorts, I don't even need to put my staff on screening. I could just put my staff on interviewing if it gets through the screen of the bot. And I think that's an interesting use case. So that's something that there is a substantial return on our investment to be able to fill empty positions faster, screen better candidates, start to profile and understand what are the predictive analytics that go along with not just people who will be hired, but people who will perform at a high level and stay in our communities. So this idea of being able to optimize the whole hiring process, I mean, that is one of our greatest challenges and a beautiful use case with a real ROI. So I do think that, these companies really have to hone in on like, what is the value? And where there's value and where there's real customers, there'll be real investments.
So I saw a future workflow for an HR hiring process that was laid out, which was that you fill out a form, and then after you fill out the form, you get a notice, we are ready to interview you right now. Would you like to be
Yep.
interviewed right now? And you say yes. And you get an avatar. You get a human looking avatar who then interviews you, asks questions that they either wanted to reserve for this stage or that they still had questions after you filled out the form or whatever. And then they ask, 8 to 10 questions. And then, but you have to do this before you could talk to a human. And
That's right.
so
Exactly
very,
right.
and this is saving the time of HR people who are in turn saving the time of the hiring authority. So very
And
interesting.
getting the positions filled faster, which helps us from a productivity performance perspective, right? Higher quality of care because we're fully staffed. And it also reduces our cost of care because we don't have to hire agencies or pay overtime if we have a full staff on the line.
And didn't the New York Times just do a big piece on senior living?
But yes, I kept it here. It's all wrinkled because I'm like reading it. Last Sunday, the New York Times did a whole section, their real estate section on Sunday, November 2nd, was on senior living. And they did an excellent job, I'm going to say. So for those of you who still get the paper and read the paper, it was actually lovely to see it in print, even, right? It's kind of a lost commodity, but they covered all of the bases, right? Everything from what is the various types of senior housing, tell us about aging in place, those that decide to stay home, college communities we just talked about, clubs, the idea of kind of very luxurious forms of senior housing, this notion and challenge with downsizing, and then this idea of cohabitation through multiple generations of a family. So I have to say, they did an excellent job. I was very impressed. They covered a lot of material. Some of the big factors that they didn't cover was the statistic that I mentioned before is that, it is a product that is very attractive, very desirable. But I think they gave all these options because they know, like, explicitly that only such a small percentage will move in, can afford it. So they provided a whole range of options, whether you're this one family they feature that multiple generations are caring and feeding and supporting and funding each other. That is a very affordable way to live. My husband's Brazilian, and, it's very similar in Brazil, right? The whole family of multiple generations live near his grandma and they take care of her, and she's always provided for. But that's harder to do in this country where people tend to move away and have their own careers and their own lives away from their older loved ones. So this was kind of nice. I thought they did a lovely job. It was many articles, and if anybody's interested, you can find a lot of these articles. I'm sure if you just put senior housing New York Times, you would see all of the articles come up one way or another this weekend. So yeah, I loved it, and they did a great job. It's here and now. It's getting tremendous media attention. People are very curious and concerned, and it's an exciting time for the business.
So I think it's a gift to us of the Industrial Revolution that you have kids go and live in school with other kids, and then seniors go and live in senior homes. But that's not what life was like before the Industrial Revolution. Before the Industrial Revolution, you would have a son goes to at age 14 is working with his father, the carpenter, or something, and he's not hanging out with other 14-year-olds. And so maybe we're going to see in this post-industrial world, we're going to see a sort of a return to multi-generational families and breaking up this this prior segmentation that we had. So James asks, what about existing drugs used for applications other than their original intent? Yes, so that's called off-label prescribing, and physicians do off-label prescribing all the time. They're allowed to do it as long as the patient is under their care and they have recurring meetings with the patient and they learn about side effects from the patient, and they're ready and able to change the dose or discontinue the medication. And the most prominent example of that today is probably physicians prescribing GLP-1 drugs for weight loss. So GLP-1 drugs are approved for diabetes treatment. They're not approved for weight loss. And yet there's probably millions of Americans today taking GLP-1 drugs for weight loss. And doctors are pretty persuaded that it's not a dangerous drug to take because it's been used for years for diabetes. And the benefits have outweighed the side effects of the drug. And then what happens, of course, is that the pharma company is watching this carefully, and it can't officially endorse somebody using their drug off-label, but it's noticing, hey, there's this big market that's off-label that seems to be working. Maybe we should spend a few $1 million and go and do some studies and then go to the FDA and ask to have it approved for that use. And so pharma may be following the practice of doctors who are doing this and patients who want this. And so over time, the pharma keeps adding to what's covered by the label. So Meredith, I'm skipping now because we were a little over time, but so this is a part of the show where we're going to talk about a technology that's improved your life with the hope of that will give an ideas to our audience. And I'll just mention here that in the past, it was so that I see more and more people using, and I've just gotten myself, a little Bluetooth keyboard that would slip easily into a shoulder bag. Light, Apple makes one of these, smaller than the large keyboards we have on our desk, very light. And these days they would be rechargeable by USB-C, which is very convenient. And you connect them to your iPhone or to your smartphone. And so you're in a cafe and you didn't bring a laptop and you didn't need to bring a laptop. And then you pull out your phone, and maybe you have a case for your phone that is also a stand that exists. You can have cases where something little pops out that makes it a stand. And then you can page through your email, your calendar, your notes, your work product documents. Maybe you want to write something up or whatever. Maybe you keep a journal. Maybe you maybe you write reports for a living. And so you can do all of these on your phone in the cafe. And then at the end of that, you just put your phone back in your pocket and put your little keyboard, slip it back into your shoulder bag. But you didn't have to carry around a laptop, which is, even light laptops are heavy. And a laptop's also worth $2,000. And if you drop it, you're going to regret that. And so, or if it's grabbed in your bag in the cafe or whatever. And so this is just, I've seen more and more people treating their phone like a laptop, but and phones do more and more, and phones have more and more apps that do more and more things. And so the last step in making it like a laptop is to get a little keyboard for it.
Love that, Stephen, because we both have teens, and I don't know about your child, but my child goes to a school with like a 15, 20 pound backpack. She has a laptop, she has an iPad, she's got all these expensive, heavy gear that she goes to school with and walks around with because she goes to a campus school. There are no lockers. So I love that. But, she's going to convince me, and she's probably right, because it's a no phone policy at their school. She needs to bring at least one device. And I tell her, just bring the iPad. It's so much smaller and lighter. And she's like, no, I need to be able to access all these different things. And I think, yes, there's a huge opportunity to simplify that, at this stage of the game, keeping it light and being high functioning with less equipment to carry is a very important thing.
Yeah, and an iPad, a lot of people have an iPad, and an iPad is a consumption device if it doesn't have a keyboard. But the moment that you add a keyboard, and most people's iPads don't have a keyboard, and if you buy Apple's keyboard, it's like $150 or more for the iPad. You can get a cheap Bluetooth keyboard, and that turns your iPad from a consumption device into a production device.
I need to talk to my husband is a computer science software engineer. So in this house, he is responsible for those decisions, but I keep pressing and probing, like, why can't she? Why wouldn't she? It doesn't seem to be the way it's going to go anytime soon. And they don't, in our day, we would save everything on our desktop. Nothing is on anybody's desktop, right? So you could be on any device, anywhere, and have access all your files. Send me the link. I want to send it to her and see if this one will persuade her one way or another.
That's great. And do you have a technology that's improved your life?
It's interesting. I'm like very basic. I'm embarrassed to say. I mentioned before, like the Apple Watch. My husband broke his ankle once and he insisted we go on vacation. And I was like so happy to think that, we can leave for a few days, leave him behind, and like he would be able to use that device. That became my daughter's. So she has that. That is obviously transformative for seniors as well. My parents have the Ring camera with the phone connected to their phone. So if the doorbell rings, they like many seniors like to be traveling, go visit my brother wherever he is and his family and go travel as much as they can together. And this idea of having the flexibility to, if the doorbell rings or if a package comes or something that is in the house that, movement that shouldn't be, they're quickly alerted. So I think that from a security safety perspective, my dad gets a lot of reassurance and confidence from that. For me, it's funny because it's not a new technology, but I love it. Like I'm a big Peloton user, and I was just reading about, and it's super exciting. Peloton did a deal with the hospital special surgery, and I was like hoping it was just a matter of time. So this idea of the equipment that I've been using to get exercise in terms of, cardio, and I do it with the weights because at this stage of my life, I have to do weight training for osteopenia, prevent osteoporosis. So all that's really important. But now there's the HSS Peloton combo, which could become this exercise device become more like therapeutic, and I don't have to go to physical therapy and invest the time and invest the money. Using this more fitness equipment for therapeutic benefit is something I'm very excited when they introduce it, and to think about and focus on your lower back or your strengthening or your rolling out, things that my daughter would more comfortably do after her track meets and other activities that she does like dance. And, it's harder for people like me to commit to. And now it'll be easier because it's loaded up and already there. And I don't have to go make an appointment and pay the money. It's already a subscription that we have. So that's something I'm very excited about. But it's, again, low tech. I tend to be more like older people than on the leading cutting edge. But my husband's on the leading cutting edge. So he tells me what I need and when I need it, and then I just kind of jump on it.
And our audience just asked me to send the link, and so I'm not sure what's meant by the link, but I assume it was for a small Bluetooth
the keyboard, the Bluetooth keyboard.
So I put the link in our LinkedIn chat. I like the one on Amazon by Macaulay. Makes a $40 small white Bluetooth keyboard. Apple has one. And it is more than twice as expensive.
Okay.
But and then a lot of people make them. But what I would say to people is look for one that's wireless with Bluetooth and that charges with USB-C, as opposed to using an earlier technology or having AA batteries or something. That's why I chose this one. So let's see. So then
Starbucks brought back their comfy chairs, so you might even be able to sit in a Starbucks again and do something. Remember, it was like in New York they closed the shops that are kind of come in and get your drink and go. And now what I saw is the stores that remained like cafes, they brought back in the comfortable furniture. It's interesting. So now you have a place to sit again.
Cool. Well, so upcoming conferences. So in healthcare, the big thing on people's minds right now is the JP Morgan Healthcare Conference in San Francisco, second week of January. And that is a big investor conference, and people are gearing up for that. And in fact, there's a rule of thumb, which is that people go there to do meetings, and you're more likely to get a good meeting at that conference than at other places. And so people will write off to dozens of prospective meeting candidates. And the time to do it is before Thanksgiving. So Thanksgiving is coming right up in 3 weeks. And so now's the time to get off your letters to say to people, let's meet at JP Morgan. So that's upcoming conferences. Are there any conferences that you have your eye on that you want to attend, that you recommend our audience attend?
Well, so in January, I've worked with one of the industry leaders on a white paper, future playbook of the industry, and that will be out in January. It's published by the American Senior Housing Association, so we'll be doing an online Zoom for that. They do have conferences in the first quarter for those that are members, so that's kind of an exclusive group, and those that are players in the industry will be there. There's another conference that I'm doing, Senior Living 100. That'll be going on in the winter as well, going out and talking about the white paper with industry leaders and innovators. So that's an interesting one. But if there is another conference, you could look it up. It's called Senior Living Innovation Forum. They just had their October conference, but I think there is another one that comes up early next year. So that was an interesting one. It was actually, I've never been to a conference like this. I'm not going to lie. It was kind of like speed dating, where the vendors pay for the buyers to be there. And so they pay for your hotel. Obviously, you're on to pay for your airfare to get there, but they pay for the hotel, very lovely meals and activities while you're there. And that's all subsidized by the vendors. And then when you agree to go, you're also agreeing to a number of meetings with the vendors. So in a span of like, let's just say 5 hours, I met with like 6 companies. And it was like very fast and got to know a bunch of companies very quickly. And so if you are in one of the many people out there that are trying to sell it to this industry, you could look it up, called Senior Living Innovation Forum. And they try to balance the two and be the intermediary between. And I thought it was an efficient way for those on the sell side to connect with buyers in the industry. So they could look up that as well.
Yeah, thank you. That's great. Well, so now we're going to move on to the second half of our show. And this will be more of an sort of interview type format. And for our audience, feel free to ask questions in the chat. The theme of today's show is that the silver tsunami will strain the healthcare system and be taxing for workers, but could new tech help seniors remain active and productive while reducing the strain on the system? Meredith, why don't you tell us a little more about your background and career, but also just tell us about the silver tsunami. What's happening? Why is this going to put strains on the healthcare system?
Absolutely. So, as I said, I've worked for some of the largest owners and operators in the industry of senior housing since 2001. Some of the largest companies in our industry that might be household names. Some of you might have loved ones that are there, or you have these communities in your neighborhoods, are like Sunrise and Atria and Brookdale. And my work has spanned the continuum. So I did do active adult housing, which is more of a home builder play, which on average people are, let's just say 62 and older. And then we go up to independent living, which is more like a hotel with more hospitality services, whether it be dining or housekeeping or transportation. And then we layer in assisted living, which is where you get activities of daily life in addition to hospitality services. And then dementia care, which is more specialized for people who have cognitive challenges and such. Also, nursing is an area that is part of some of the continuums of these campuses. So my work has spanned the continuum, and there's no question that the silver tsunami that is here. We've been waiting, Stephen, for this moment for 25 years, right? We had said, oh, in 2025, the boomers are coming. And we touched on some of these themes earlier, but the challenge that our industry is facing is what they call like the caregiver ratio. So this idea of the ratio of people 45 to 64 relative to the people who are 80 and older. And what we're seeing is a big decline in that ratio. And why is that important is because it's going to be increasingly difficult for families to take care of their loved ones that are going to live longer and have needs that are greater over an extended period of time, but also professional caregivers. They're harder to come by. So if you need to be home to take care of your loved one and to go work in an and already we have so few people to care for this older population. So what is considered a caregiver crisis. And so there is that beautiful one of the story of longevity. Evan Valley is hacking how I could live longer, but I'm a advocate of vitality, hence the name of my company, of Vitality Society Span. But there's no question about it with people living longer and this idea of various diseases being managed for longer. Like I looked at some of the statistics and they say that 80% of the population 65 and older have one chronic disease, and about 70% of 65 and older have two chronic diseases. So people are living, whether you have hypertension, which is heart disease, or diabetes, or various other chronic diseases, arthritis, you could be living with these debilitative conditions over an extended period of time where your need for help and support is greater, and the caregiver crisis that we face makes it really challenging. So it is an opportunity for a lot of companies you'll see that are creating various ways to support the caregiver, right? How do you help the caregiver for those people who have dementia, as an example? Or how do you more efficiently go about finding a senior housing community? So I was recently a speaker at a Place for Moms conference, and that's a company that's been a leader in lead generation. They're very family focused. So, that's a company that has done a lot of work in placing seniors in senior housing. So there's been a lot of companies that are going to simplify and support a longer aging period for families and caregivers. So it's complicated, but we have an affordability challenge, we have a labor challenge, we have a pricing challenge. So our industry is not without its complexity, but you think about what senior housing is, and what got me excited about the industry decades ago was that it's hospitality, healthcare, and real estate. And any one of those businesses in and of itself is very complicated. But to do all of them 24/7 for our residents that live there and families that trust us, it's very tough.
And uh, you know, what are some of the ways? And I guess is there any more to say about how the system is being strained? I'll just mention one thing is that there's been some health economists who have tried to calculate the impact of caring for the growing number of people with Alzheimer's, and the numbers they come up with are just astronomical. And that's just one condition, but there's more people living longer with Alzheimer's for more years who need more and who may need intensive help. And so that's just one example of this. And then there's the population pyramid doesn't have vast numbers of young people working, contributing into the pots. And so that's just one simple example. But we'd love to just hear more about how the system is being strained, and what's being done to address it.
So part of the inspiration for me to launch Vitality Society was this focus on prevention. I believe prevention is the best medicine. We, as an industry of senior housing and care, some of the greatest number of people are on our lead list, right? They're not necessarily ready to move in. They have an interest in senior housing, a curiosity of senior housing, but they're not yet ready to move in. So there is this opportunity for us to decouple the real estate from the services, like I piloted and demonstrated. And there is this opportunity for us to focus on the preventative side, right? Not even if you just live with us, but if you're curious or you live around us, like why is it that people couldn't and shouldn't come to us to get great meals that are healthy, great gym facilities that are underutilized, and come to us as a hub of healthcare and preventative care? And I do believe that these geriatric centers of excellence is a huge opportunity. And combining it with senior housing, where you have a very large population already residing, and those who aren't residing there but could benefit from being there, is a really substantial opportunity. But there's no question in my mind, Stephen, like as a society, this emphasis on prevention. And I do think a lot of the payers, the health insurance companies understand that. Like Blue Cross Blue Shield did a big study. Some of the more familiar programs are like obviously weight loss or smoking cessation. Like they know that helping their members reduce their cost of care is financially advantageous. So I do think we're going to see a shift in this preventative model and a greater emphasis on it. I think it's going to become a higher priority for health insurance companies. And I think senior housing, if we do what we do well, which is great facilities and communities and services, we could really leverage the fixed costs of what we have across a much wider base above and beyond the residents reside us, but the community around us. And the nonprofit that I work with, we are working on that, and we do have a model for that. And I think it's very interesting and very exciting to address some of the greatest challenges. And I will say one of them is loneliness, right? We know that loneliness kills. It is very expensive. And so this idea of combating loneliness, while 90% of the population is going to age in place at home, staying alone is not necessarily the answer. So we are perhaps part of a bigger solution. Choose to stay at home, but combat the loneliness, get the quality meals, get fitness and other type of instruction and programming with other people that you can benefit from living longer because you're going to live better. And that's what I believe in. And I think prevention has to be part of that. And senior housing has a great positioning to be able to seize those opportunities.
Yeah, really interesting. So when it comes to loneliness, I have personally seen a number of seniors who have poor hearing, and
Mm.
until recently, hearing is something that it was just really hard to do anything about. If you lost your hearing, there was no magic bullet to just get you your hearing back. And then this would then lead to these seniors wanting to be connected to people, wanting to be social, wanting to meet new people, etc. And they just have a really a hell of a time communicating, because of course we all expect to communicate in person by talking, and it was just so demoralizing and awful. But there are new technologies, so obviously hearing aids are they're getting cheaper and better, more commonplace, more useful. But there's other things like ambient transcribing. You could have reliable, excellent voice to text on a device. So the device is cheaper and more available than ever, and the tech on the device to give you a transcription. And even if the person can mostly still hear, they might be missing parts of words and it's confusing, but then they see it excellently, accurately typed out on a big screen in front of them. And that could be outstanding. So loneliness. And then I think people who are passionate about healthcare and passionate about age tech and passionate about longevity, there's this enormous frustration with the US healthcare system. And so the US healthcare system doesn't handle healthy living and prevention well. The US healthcare system is built that a patient presents with a problem. Now, by this time, it's too late to do prevention. And then you're paid primarily to act to solve the problem, maybe to intervene to solve the problem. So you're not paid much for diagnosis in the US healthcare system, and you're not paid much for prevention or for healthy living. But this is a great area where tech could make an enormous positive difference. It's just that this tech isn't going to be paid for by the healthcare system. And this tech, it might be cheap and it might prevent expensive illness, but in general, it's often not paid for by the healthcare system. It's up to people to buy it for themselves, apply it for themselves. And so people want to change the way the healthcare system works. And I'm mostly describing the old fee-for-service system. And there's the possibility under the new fee-for-value system, which is still, it's Obamacare. It's still sort of, the pig is still moving through the python of the system on this. But fee for value does recognize more the value of prevention and looking at the whole patient. But ultimately, it also puts providers on the hook for changing the behavior of patients. And as a society, we don't always like that. We do want our doctor to give us a thumbs up for taking our statin medication. We do want our doctor to tell us that smoking's a problem and that we need to quit smoking or whatever. But doctors start being paid based on outcomes, then they're going to want to intervene a lot more. And as a society, I think we're not ready for doctors trying to intervene on your behavior more, control your behavior more. We probably don't want that, even if it's well-intentioned, even if it's coming from our doctor. But so we'd love to hear more about. So anyway, just love to hear your thoughts on that.
I have a lot of thinking on that. So first, let me talk about the ear hearing piece of it. Apple, going back to the Apple, right? So the Apple AirPods, right, that you put in your ears, there is doubling as a hearing aid, which is very interesting. And why is that interesting? Because some of the biggest challenges associated with aging is the stigma associated with these devices. And so by Apple providing it in their beautiful encasement that like every teen in any city is walking around with, it's wonderful and delightful for an older person to be able to do um, and engage in that without stigma that they needed sound amplification. So I just wanted to mention, again, not a plug for Apple, but that these hearing is obviously vitally important to remain engaged and participate and have a high quality of life. And so, the idea of what Apple has done, destigmatizing that, I think is really valuable. And if anybody is here designing for seniors, that destigmatization is really an important piece of it. In the spirit of that, I benefit from having two parents who thankfully are still alive. And my dad, his balance isn't so great. He's known to fall every so often. And it is very concerning. I saw him once walking down a corridor, going kind of wall to wall. And I was like, this is not the answer. And he was breathless, Stephen, because it's like, how exhausting is like moving side to side when you're trying to go A to B most efficiently and you've got zigzagging through a corridor. So I was doing my research and I had seen in the city streets a lot of the walkers that are older were using these ski poles, and they have like wider bases than obviously a standard ski pole, but it's the same type of grip and it's the same type of height and it's very comfortable. And I bought them for my dad, and it is a complete game changer. He is able to walk much more with greater stability. He's able to participate. We did a multi-generational trip around Chinatown in San Francisco for about 3 hours. He walked up and down the hills of Chinatown, and it was just so impressive. Again, this like destigmatizing, again, he doesn't want to walk around with a walker. He doesn't want to be, and he doesn't need to be in a wheelchair. Driving around in a cart is not something he wants to do either. Although they did appreciate the Waymo, and that's another great technology. These self-driving cars getting in was very valuable for my parents, right? Because my dad didn't have to tell someone, go slow, go fast, go here, go there, right? It was like a set way, a set place, and it gave them a lot of autonomy and freedom. So I do think that these technologies, ski poles, keeping people active, Waymo self-driving cars are very interesting for seniors. I would just go back to what you said about paying for outcomes. So the term that you're referring to is value-based care. And I think in senior housing, we are aiming in that direction. We have been trying for quite some time, some companies harder and longer than others, but there's no question about it that we play a very valuable role in value-based care. The industry feels like we do all the work, right? We're keeping people healthy. We're ensuring that they eat good meals. We're ensuring that they're not lonely, that they don't fall, that they keep their brains, at the highest level possible, because we're going to engage them in our programming with different people. So there's no question that we are a valuable part of the value-based ecosystem to have better health outcomes at a lower cost than going into, let's just say, a hospital or a nursing home. So we are working as an industry to prepare ourselves even more so to benefit financially and offset some of the cost, frankly, that otherwise a consumer might pay. So in the value-based care business, in order to be successful, there's a variety of factors, but one of them is to have really good data and information about how people are functioning at the current state and how we're keeping them at a steady state or helping them improve over time. So as an industry, we really need to optimize our systems so we can collect better information, so we can be compensated in different ways in different structures. So that's something that very outcome driven is something that the industry is trying to do a better job at. And the idea of, as we all know, this idea of physicians, as you alluded to, taking risk about different populations. I mean, there are a number of providers that are at-risk providers for seniors. And you're right, Stephen, like, is it like how much, does a doctor want to invest in that, and how much do people want their doctors invested in that? I mean, I'm a proponent of it. I think it's wonderful. Who wants to go for needless testing? But I do want my doctor to be financially incentivized to keep me well for as long as possible at a lowest cost. That's something I don't want to live in doctor's offices. I don't want to take medications and have interventions and testing that's unnecessary and superfluous. So, I think this is something that I like, that the doctors have skin in the game and they make more when they save the system more. And I think the patients and the caregivers benefit from that as well. So I'm a proponent of it. I think the industry will be a big player in it. It's in more of an early stage of where we're at, but it's definitely where we're headed.
And so let me, that's great. Thank you. And so we're nearing the bottom of the hour. And so let me throw out, we promised the audience to talk about some technologies. And so I just wanted to throw out some further technologies. And so, one is I saw a speech by an expert from the AARP's Age Tech Consortium that they have. And this person stressed that for seniors at that time, which was about a year ago, um, that there was a lot of potential in voice technology. And so as much as or more so than for the middle-aged or the young or something like that. And so here I think they're talking about like Amazon Echo. A lot of people have that, and that drives real world outcomes. You say to Amazon Echo, I am out of laundry detergent. Please order me more of my usual. And Amazon Echo will do that. And so, or it could be tell me about the weather, or it could be set an alarm for 3 o'clock today, or so Amazon Echo, and that's also Siri for the iPhone, and that's also ChatGPT, which has a truly excellent voice version of ChatGPT. You would swear that you're talking to a human being when you're talking to it. And so there's a voice, and then there's also, I think, we're about to see a payoff in the robotics space. And so the most obvious robotics would be self-driving cars. So for seniors, a huge issue might be that they live in the home they've lived in and raised their kids in 40 plus years, and they don't need to yet move into senior housing, don't want to, but suddenly they're having trouble driving. And so this is and so wouldn't it be nice to have an easy solution for that? Well, so self-driving cars would let them stay a few more years in their home that they don't want to leave, but have a very convenient self-driving car solution. It's convenient, affordable. And then also we're seeing humanoid robots being trained in daily activities. And so and you could throw in there cooking and cleaning, so there might be just too much wear and tear for someone to have to bend over for 5 minutes to clean the toilet bowl or something. That might be too much wear and tear for a senior who has a bad back. And so, but you could now get a humanoid robot. Well, you can't quite get them yet, but it's on the horizon. And then the third, I mean, if you could get them yet, I would get that. What you can get is the robotic vacuum cleaners. I have a robotic vacuum cleaner.
Yeah.
Floor gets vacuumed and mopped every single night. It's amazing. So, and then there's also AI avatars and companions. And so this is like, it could be a physical robotic dog that has a routine of behaviors with you in your living room. But it could also be a buddy, a friend, someone to talk to that is an avatar on your phone. And these have rapidly gotten better over the last couple of years. It used to be sort of a joke or a punchline of a joke, or it used to be something that teenagers were into. They're getting good enough that this would be someone to check in with, talk to. And there's versions that will act like doctors or therapists as well. So you could imagine someone even talking to their therapist who's an avatar on their phone who doesn't charge them $200 at the end of the hour. So those are, I just thought I would throw those out. Any thoughts or other technologies that you see coming down the pike that will help with this silver tsunami?
Yeah. So in our community, there's one community in particular. It reminded me when I was in South Korea. So I was in a restaurant at the hotel, and all of a sudden you see these carts like moving from point A to B to C, picking up various different, they had like trays that were there, and they would sit there for a while, collect it. The staff would put the trays and on that's dirty, and the plates and other things, and it would like go right to the kitchen, right? So we have some of those already in our communities. So while we're not yet where the robots are providing care, although I do think that's something that's happening in more like you'd find that in Japan. Although I was in Japan and I couldn't find it, I really wanted to see it and see how it worked. Right now in terms of this idea of like busing trays, that's something that has been available. A lot of more like programmable technologies like pill dispensary. So this idea of those devices connected to like a bot that kind of helps you figure out, have I taken this? Am I taking it at the right time? So I do think this adding in a layer of technology, which helps those that may need the reminders, is huge. But again, I go back to Stephen, these technologies that further isolate seniors to me is not the panacea. I think loneliness is deadly, as we know, and more importantly, to be connected, to stay connected, which is something that I had seen and piloted during the pandemic, was so valuable. This idea there's no substitute for meeting people who are in a similar stage of life, who want to engage with you. I just did a video for my client, and it was an impact video, and truly what people benefit from. And I think about this all the time. Like Jane Goodall is a great example of this. She realized that these basic principles of vitality that are good for all, no pun intended, is just staying connected, both with programs and possibilities that you could remain relevant and engaged, and with other people, right? And for her case, it wasn't necessarily only people, but this idea of it is very fundamental, the building blocks of living a healthy, longer life. And while I think technology could facilitate it and enable it, I don't want to say that one could live alone with robots and devices. I do think that's why I stay in the industry of senior housing. I think it's so valuable to find ways to simplify and reduce the costs with technology, but at the same time, supplement your life in ways where you're connected to lots of people.
Yeah, that's a really interesting point, which is that there are technologies that reduce your connectedness. So having an
Hmm.
AI avatar instead of a real friend,
Yeah.
creates the simulation of having a friend without having a friend. And there's also technologies that would increase connectedness. There are technologies that would it's like a more advanced kind of always on phone between households. You could imagine a retired parent in Florida, their adult daughter in Ohio, and then she just goes, "Dad," and then there's a speakerphone that has cut out the dialing the phone and picking up the phone process that picks up in Dad's house or whatever. And you wouldn't want that with strangers, but you would want it with someone who raised you or something. And so that's a good point. Also, for Meredith, any final thoughts on the silver tsunami and how we're meeting those challenges and how tech helps?
Yeah, I would just say that I often get questions about career opportunities and ways in which those who have very deep expertise in whether it be technology or marketing or sales could participate and engage in this senior economy or silver economy, whatever. It is a very high growth market. There are tremendous opportunities. And Stephen, everybody could figure out my LinkedIn. Also, meredithoppenheim.com is my website. So one area that I love to work on is looking at companies that aren't yet playing in the space, but tangentially or peripherally. Like I would love to, be able to support you in serving this industry. It is very complex. It is very nuanced. A lot of people have lost a lot of money and a lot of time. So it's not easy, but it's vitally important work. And it's such worthwhile work that I feel like I've been on a mission since I began this work when I was in high school. And it's just getting even more exciting over time. So my hope is that this spawns a lot of interest in others participating in some meaningful way and making life better for older people, which has always been my goal. I'm just becoming one of them now, Stephen. That's the reality, right? When I started when I was 15, yeah, the older people that I serve, but now I'm becoming one of those older people. So I'm trying to find young people that are coming up. So if I read the people who are participating, there's a great number of people that are nurses and working in hospitals that are a younger generation than us, Stephen. Like that's very exciting to me because I need to make sure there's enough of them to take care of us, Stephen, when we come of age.
Yeah. So the Russian revolutionary Leon Trotsky wrote an autobiography, and he began it with, "Old age is the most unexpected thing to happen to a man." So, but I know what you mean.
Up on you, right? It happens. Yeah. Well, I remember when I started in 2001, 2002, and we were saying, oh, the adult daughters, right? Those women 45 to 65. And I was, sitting there at 28 years old. It was seems so far off, so complicated and so not understood. And, now I'm right in that sweet spot, that panini generation. So, yep, it happens and it happens quickly. So I salute all of you who've stayed on and this is of interest because it is very interesting and the times are very exciting. And so if you're going to do any work, like one of my mentors likes to say, after the war, everybody should have been in the baby business, and after World War II, and now everybody should be in the senior business. And I feel the same way. So be in touch if I could be helpful and resourceful as you navigate the complexities and opportunities of this. So thank you, Stephen, for having me. What a treat. And thank you for being engaged deeply in this space.
Yeah, thank you for coming on the show. Well, so you've been listening to the Digital Health Investor Talk show with host Stephen Wardell, and many thanks to our guest, Meredith Oppenheim, an expert on aging and the founder of the Vitality Society. You can follow her on LinkedIn. And we're publishing this show as an episode of the Digital Health Investor Talk show on Apple and Spotify. Don't forget to check that out and rate us. And if you're in Boston on Thursday, November 20th, I'm hosting one of my Boston Health Innovation Nights at the Liberty Hotel. You can find the registration for that at stephenwardell.eventbrite.com. And thank you so much, Mary.
Thank you. Thank you, everybody. Thank you, Stephen. Delightful.